So can you see my screen?
Yes,
Can
I
you see
can
my
see
screen?
your screen.
Okay, no problem. Okay, so yesterday we did we did an introduction and we talked about trend. And in our trend we discussed about the three major kind of trend that we have in the market. And we said that we have the uptrend, we have the uptrend, which means that the bulls are in control of the market. And one of the one of the key indicators that we will surely see is that we see the market creating highs and lower highs. And we concluded that whenever we have a bullish trend, it is expedient for us that we allow we take a buy position. And we said that we always buy a discount. And we also discussed that whenever there's an expansion, there must be a retracement. Whenever there's an expansion, there must be a retracement. An expansion, a retracement, like that. And we talked about the second kind of trend, which is a downtrend. And we said that this is when the bears are in control of the market. And majorly, the market tends to head towards the downward direction. And we always sell at premium, and the more the market goes down, the more we're in profit. And one thing about it is that whenever the market is going on a downtrend, we don't chase the market nor try to buy, because we said that we must not trade against the trend. And one thing about it is that when we have a high, there's a likelihood that we don't have a high as equal as this, or maybe as equal as this, but the next thing is a lower high, highs that are lows, highs that are lows, and we have lower lows, lower lows, lower lows. And in a bearish trend, what we do is that we sell. And the third part of the trend is that we said there's something called ranging market. And is that kind of market that we have to be careful about. And why? The reason is because the buyers and the sellers are in control. No one is less, no one is greater. They have equal power in the market. So those were the three major trends that we have. And we had this conversation yesterday that whenever there's an expansion, there must be a retracement alongside. Whenever there's an expansion, there must be a retracement. Whenever there's an expansion, there must be a retracement. This is it. A retracement. And we said that we don't buy inside the impulsive movement. We don't buy inside it or sell inside it. We wait for the market to retrace, then we buy or we sell. So, and we said that the market does not go on a straight line. The market does not go on a straight line, but rather it expands and retreats. Okay, so having this, we move straight away to the market structure. I've said that the market structure is what gives us the capacity to know the kind of trend we have. Is one of the indicators of every trend that we have. And it's the scenario. We said, can you hear me at all?
Yes, I can hear you. It was breaking at some point, but I think it's stable now.
It was the network.
Okay.
The
Okay.
network. So, so I said something that it going up. We have it to the upside. The trend going to the upside. The trend going to the upside. the trend going to the upside. Then suddenly we had something like this. We had something like this. We had something like that has an impulsive movement like this. And we said that whenever it breaks the low, it shows that we have a break of market structure. And one thing is that there must be a what? A retracement. Then we head to the downside direction. And when we observe it, I don't know, maybe you can hear me.
I can hear you.
Okay. Okay. It's looking as if that the network wanted to be so bad, but just bear with me. Just bear with me.
No
Just
problem.
bear with me. Okay. So we had this conclusion yesterday that whenever the low is broken, it shows that we have a break of market structure, actually to the downside. Then you can see this low also. There is a break. It shows that we have the market is going to the downside. And one thing I want you to know is that whenever the market breaks the low, there will surely be a retracement. There will surely be a retracement. One of the reasons why the market is retracing is because a major low has been broken or a major high has been broken. And remember, the concept of expansion and retracement means that whenever there is an expansion, there must be a retracement. So now that was where we stopped yesterday. So what I'll be doing today is that I will be focusing on just charts. I won't be drawing line today. I'll be showing you market structure. I'll be showing you market structure. So after laying all of this foundation, then let's continue what we have today. So I'll be using synthetic indices because the currency market is not open currently. It's not open. So I'll be using the synthetic indices. So okay. So let's start. Let's start. So one thing is that I said market does not move in isolation. So let me delete everything that I have here. So market does not move in isolation. There are reasons why the market is moving. There are reasons. So markets will not just move anyhow. They will not move anyhow. There is always a reason. There's always a pointer for every movement that we have. So now, today, one of the key factors of us to recognize a trend is the market structure. And what I mean by that is that market structure, they are just like one of the ingredients to identify a trend. Number one is that in a market structure, if it is bearish, a low must be broken. A low must be broken. A low must be broken. So whenever you see a low being broken like this, it indicates to us that we have a break of market structure. And this is it. And one thing I said is that whenever a market structure there must be retracement. Then the market will head towards the direction again. And if you have there's a break of market structure again. There's a break of market structure again. Then we observe again there must be a retracement, a kind of retracement. Then we had a break of market structure again. We had a break of market structure again. We had a break of market structure again. Then we have a retracement. We have a retracement. We have okay, yeah, there's a break of market structure. I mean, There's a break of market structure here. So we had a retracement. So now, when you look at all of these movements, you can see starting from here, there was a break, a retracement, another break, a retracement, then another break again. You can see it has broken it. Then a retracement back to that point, then another break, then a retracement back to this particular point. Now, when you see the market doing something like this suddenly, now this is an indicator to us that the market trend has changed from going to a downside to the upside. And this is it. This is why. Number one, if it was going to the downside, you see the market creating new lows, creating new lows. But suddenly, this is the high, this is a low, and the market broke it. So it indicates to us that the market has changed a trend. And now, whenever you see it this way, just mark a break of market structure again. And the next thing you should be waiting for is a retracement. Is a retracement. A retracement. Retracement like this. Then you have this particular move again. Then the market forms again. Then we move again. Now this is a break of market structures. We have this break of market structure as well. Now we have the market cycle. Number one, a downtrend. Number two, we have a uptrend. There are things that
Sorry,
made them move to. Okay.
sorry to interrupt you. I have a question.
Okay.
What if,
Okay.
when this middle part where you have the break of market structure and it's changing to the, uptrend side. So what
Yeah.
happens in a case scenario where after it's, goes to the uptrend and then it breaks the, you know, downtrend side again and then
Okay.
goes lower than the lower low of the previous one
Okay.
before breaking the market structure.
Okay.
Are there
Thank you.
usually case scenarios like that?
If you're going to have a scenario like that, it will be as a result of liquidity. And liquidity is actually the next thing we will talk about. So when we talk about it, you will know why it can happen that way. Do you understand me?
Yes, I do.
So I'm just trying to take a baby step so that you can get it. Okay, so let me delete all of this line and we look for a way to replicate it on the chart and show you how it looks like on the chart. So let me dive to. Okay, yeah. This is the market structure. This is what I mean by market structure. You can do me a favor by muting your mic.
Oh, sorry.
Yeah. So we have this break of structure, and this is it. This is the high. This is the low. The market aggressively broke below it. So the market retraced back. Retracement. You can see it. Retracement. A retracement. Then if you look deeper into it, there's a break of structure again. You have a break of structure here. The market is yet to feel it properly. So let's go to 1 hour so you can see it clearly. Okay. So this is it. This is it. We have a break of structure here. We have a break of structure there. And you can see here's the retracement. Here's the retracement. Then we had another break of structure. That break of structure, then the market retraced back into that particular point. Then we had another break of structure. You can see I will prefer this particular point, so to be circumspect enough. If you pick that one, there's nothing wrong about it, but let's pick this one. So the reason is because this is the high, this is the low, and this market broke this immediate low. So this is a break of market structure. This particular movement broke it. Then like that. So the market is yet to fill it properly while we still wait. Now let me check volatility 10. Volatility 10 as we look for market structures. Okay. So I know as of yesterday, this thing was ranging. I don't know. Maybe it was you I was telling yesterday. Maybe it's someone else. Okay. Let's look at the break of market structure. So we had this break of structure. So this one look like a little break of structure until we dive into it to see properly. So this market came to retrace this particular point, retracement. Now this is it. This is the first point A, point B. Aggressively broke the point B. So this is a break of structure. And the market rallies back for a selling opportunity, then to the downside. Okay, I can see another break of structure inside this particular point. I'll show you. Or we'll go to a lower time frame. So let's go to 30 minutes to see it properly. Okay, yeah, this is it. So we have this particular break of structure. Then we had another break of structure. The market retraced for a selling opportunity. Devil is a liar. I never know that. I've been kicked out of it. Imagine.
Oh wow.
Yeah. And
Ah.
I've been doing my class.
Oh. I didn't know. I thought the network went off and you would have been notified.
About it. It's the network. The network was very poor, but I was not really paying attention to one of my indicator. But no problem. Can you see my screen? Can you see my screen at all?
Yes, I can see your screen.
Okay, no problem. So let me continue. My illustration. So I said that I have a break of structure. This is it. This was the illustration I wanted to make. So here's the break of structure. This is the high. And this is the low, this is the high. The market broke it. But unfortunately, we're expecting it to come to this particular point. But the market failed to fill that level. There is a reason for it. And as we advance, you will know why. So we had another break of structure here. The market retraced back. Then we had an expansion again. A break of structure again. You can see it. A break of structure again from this point. Here is a high. The market aggressively broke this high. Then it retraced back. So here's a retracement. Here's a retracement. Then let's go to 30 minutes time frame. On a 30 minutes time frame, I can see many things here. And okay, let me use 15 minutes time frame so you can see properly with me. Okay. So we had this break of structure. The market broke. It retraced back. Another broke again. It broke the structure. It retraced back. Another aggressive break of structure again. So we had this aggressive break of structure again. Okay. Now, so having said this, now let me chip in this to you. Maybe you can grab it. I don't know, maybe you can grab it, or let me just chip it to you. One thing is that whenever you want to trade, there are some key factors you should pay attention to. Number one, there must be there must be a liquidity that has been raided. there must be liquidity that's been raided. I will show you how it looks like because I'm moving closer to liquidity. So I want to merge everything together so that you can relate. So whenever you want to trade, open your eyes to see stuffs like this. Open your eyes to stuffs like this. Now, number one, a liquidity sweep. This is what is called a liquidity sweep. So what is liquidity sweep? It means that when a particular high is being raided or a particular low is being raided before the break of structure, or you can call it a purge. When market purge the high, the previous high or the previous low. So this is the. Are you with me?
Yes, I'm with
Are
you.
you
I
with me?
wanted to ask what does it mean for liquidity to be rated?
Okay. This is what it means. It means that when the market aggressively take out this particular high or the particular low. So whenever you see a sweep in liquidity, don't worry, you will get it because that will be the next thing I'm going to move into. Then I want to match liquidity and market structure so you can understand. So here's a high that's been raided, then a break of structure, a break of structure, then a break of structure, then a break of structure. Now, after having this, now expect the market to do a slight pullback, a pullback, a slight pullback like this. Then let it retrace, then come to the downside. So now, whenever I want to trade, there must be a liquidity sweep, a break of structure, then there is always a pullback. There must be a pullback. So when there's a pullback, then we wait here to sell the market. It can never fail. This setup will never fail. So just have this one at the back of your mind. So now let me dive into liquidity. But before I move ahead, let me ask you, do you understand market structure with the way I explain?
Yes, I do.
Okay, no problem. So today we'll be talking about, we'll be merging liquidity to market structure because we can't look at market structure in isolation, and the reason is because liquidity is one of the pointer of a change in trend, and market structure is also a pointer in change in trend. But there are reasons and there is how to mark them. So that is what I want to show you. So number one, liquidity, we have two kind of liquidity. For now, for today's purpose, we have two kind of liquidity. We have the sell side liquidity and we have the buy side liquidity. We have the sell side, we have the buy side liquidity. So where is the sell side? Where is the buy side? That is the question. Now, the buy side is always at the high. The buy side are always at the high. So this is the buy side. And what is the liquidity? Liquidity simply means money, and it is the originator of price movements. Now, what really moves the market is money, and it is liquidity. And liquidity, it is not a product of being oversold or overbought. What really matters is just, is there liquidity? If there's liquidity, the market is moving. Now, this is it. We have a sell side, we have a buy side. Now, this is how it happens. Market trades from liquidity to liquidity. Pay attention to my choice of words. Market trades from liquidity to liquidity. So which means that if the market takes out the buy side, then it is coming for the sell side. If the market takes out the sell side, then it is coming for the buy side. Let me explain. Now, this is a buy side. This is a buy side because it's at a high. And suddenly, the market starts doing something like this. This is what it means. It means that the buy side has been taken out. Now, where are we going to have our sell side? That's the question. This is the buy side. This is the sell side. This is buy side. This is the sell side. That market trades from liquidity to liquidity. So if the sell side is being, the buy side has been raided, market is coming for the sell side, which means that whenever buy side is taken out, definitely the market is going to sell. Now, let me explain it. Now, whenever liquidity is taken out, it is not enough. There must be a break of market structure that indicates that the movement has started. So after buy side liquidity has been taken, we wait for a market structure to be shifted or to break. Then we wait for something like this. Now, this is a break of structure. So the first thing is that there must be liquidity that has been raided in the market. Liquidity that has been raided. This is it. A liquidity that has been raided. Buy side. And I said that when the buy side has been taken out, definitely the market will sell. But it's not going to sell instantaneously. There must be a break of market structure. Then I have it here. I had my break of structure. Break of structure. Then there must be a retracement. Now I'm selling at the point of retracement inside the retracement. Selling inside the retracement. Then to the downside. Now watch. Buy side has been taken out. There was a break of structure. The market has decided to come to the downside. It has taken the sell side. So remember my hypothesis. I said that whenever the sell side is taken, we should prepare for a buy. So now when we look at this, it's a pointer to us that the sell side has been taken. So when the sell side is taken, then what are we expecting? We're expecting a buy back to this buy side. A buy back to this buy side. A buy back to this buy side. So, and we also wait for a break of market structure again. For a break of market structure again. Then a retracement. A retracement. A retracement. Retracement. Then the market took out buy again. You can see it in the market. And remember what I said. Can you hear me? Can you hear
Yes,
me?
I can hear you. I can hear you.
No problem. Okay. So when the buyer is raided, definitely we are coming for the sell side again. Coming for the sell side again. So what are we waiting for? We wait for a break of market structure again. We wait for a break of market structure again. Wait for a break of market structure again. I'm coming, sorry. Okay. Wait for it.
I cannot hear you.
Okay, no problem. I noticed that. It is the network. Can you
Okay, I
hear
can
me
hear
now?
you again now. Yes.
Okay. So So the buy side has been taken out again. Then we had a breakup structure. Then we wait for retracement. Then the market goes down. So it goes on and on and on. Let me screenshot this because I'm going to give you as a work to examine. So now, one thing I want you to know is that market does not move anyhow. It's a product of liquidity. Liquidity moves the price. It moves the market. So now let me show you something. Let me give you this analogy. Let's assume that you're traveling from Lagos to Lagos to okay, let's use Lagos to Ondo State. Now, your destination, you are coming from Lagos. That is your bias. It means that you already have something in your mind that okay, this is where I'm going to. I'm coming from somewhere. So your bias is that you're coming from Lagos and you are heading to Ondo. Now, the story that follows is how are you going to get to Ondo? Okay, I'm going to take a bus, then from Ondo to so place, so place, till when from Lagos to so place, okay, to Ogun State, from Ogun, like that, sha, till when you will get to Ondo State. Now, those are the narrative behind that your bias of coming from Lagos to Ondo. Now, the same way applicable to trading. Now, if your bias is that the buy side has been taken, if that is your bias, which means that we are selling, then okay, so what narrative behind our selling? The first thing, there must be a liquidity sweep. Number two, there must be a break of structure. After break of structure, there must be a retracement. After retracement, then we can sell to our sell side. So, or if it's like, okay, I'm coming from the sell side, which means that we are going to the buy side, which indicates to us that we are going up. So it means if the market grabs the buy side, we are selling, we are going downtrend. If the market grabs the sell side, then we are going to the buy, we are going up. Now, let's assume that the market has taken out the sell side. So it means that okay, we are going up. This is where I'm heading to. This is where I'm heading to. So I'm going up. But before I can do that, I must have a break of structure, then a retracement, then to the upside. Now, let me clear this. Let me show you something. Let me show you something. Now, look at this. Look at this. Look at this. It's a question, actually. It's a question for you. So, look at this. This chart I just drew. What just happened?
There is a break of market structure,
Okay.
and it's on the sell side. Is heading towards the sell side after this last arrow that you drew.
Okay.
Yeah, I don't know if I'm
Let
correct.
me break. It's a market right? Are you break of market structure?
Sorry, I cannot hear you clearly. What did you say, sir?
I said, I said that. Are you correct with this break of market structure? Are you with me?
Yeah, that is
Are
a
you with
break.
me here?
That is a yes.
Break of market structure. Okay, good. Now, this is a sell side liquidity.
Which one? Sorry.
This is sell side liquidity. Lows are sell liquidity. See it?
Yes, I can.
Oh, okay, no problem. So the low is velocity, buy liquidity. Remember my analogy. The market has taken out this buy side liquidity. So if the buy side liquidity has been taken out, so what is going to happen next? That is the question to you. What is going to happen next?
It will head towards the sell side.
Exactly. So now we now have to form our narratives behind our buyers. Then look for break of market structure. We had a break of structure. Then
Once a
okay,
market structure, it's the
yeah,
once a side of the market or the trend hits
yeah,
a break of market structure, should you be preparing for the
yeah,
next step, like preparing to buy or waiting for it to go down further?
yeah, yeah.
Or
Okay, this is it. This is it. Whenever any side of the liquidity is taken, now the next thing you wait for is a break of structure. Now after that break of structure, you wait for a retracement into a particular point. And now I have not explained those parts. And those are the entry parts. I have not explained it. So when I explain it, you will get it.
okay,
I'm
thank
just
you.
I'm trying to do a baby step so you can understand everything because this thing is not simple. I'm just trying to make it so simple. Okay. So you can see this is what we have here. This is what contributes to the downside. That's why already a break of structure here originally. We still consider the pact of liquidity, which is this is the buy side, this is the sell side. Then we note that the buy side has been taken, then we wait for a break of structure, then a retracement back to this point, then the market start going to the downside. Okay, now let me do one example on currency, then we call it a day after our question. So let's go into currency. So I would love to look into JPY, GBP JPY, Great Britain pounds and Japanese yen. Great Britain pounds and Japanese yen. Okay. So we had let's introduce the concept of liquidity. Let's introduce it now. Let's introduce it. So a liquidity was raided. Buy side.
I can no longer hear you, sir.
No problem. The network. I knew. So
Okay,
can you
no
hear me
problem.
now? Can you hear me now?
Yes, I can. Yes, I can.
Okay. Okay. No problem. No problem. So sell side being raided. Sell side being raided. This is GBP JPY on a weekly time frame. So sell side being raided. So when the sell side was raided, then we already know that the market is definitely going to come for the buy side. Then let's go to our daily time frame. Then on our daily time frame, we started seeing stops. Number one is that I saw this particular break of structure. So we had this shift, but the market failed to come into that point. The market failed to come into that particular point. I will explain why, but we have not gotten there. So we had another break of structure again. Then the market retraced. For a buying opportunity, and market started going to the upside. Now let's use I want to introduce that concept of liquidity again to you. I want you to have a full grasp of what I'm explaining, because liquidity sometimes can be so tough to understand. But I knew that it's not going to be tough, because I know you understand it. Okay, so now look at this. This is a break of structure. So after I saw this break of structure, then there was a liquidity sweep. Then remember the concept of liquidity. Sell side was raided. So this is it. This is the sell side. This long week, wipe it out, and the buy started moving to the upside to frame the narrative that we had on our weekly time frame that we are bullish. Now go back to the 1 hour. So after we had that, then let's check 15 minutes time frame, and let's check how it looks like. 15 minutes time frame, let's check how it looks like. Now I just opened the 15 minutes time frame, and the first thing I will look out for is that, is there any liquidity being raided? Yes. This is it. Here's the liquidity that was raided. Liquidity raided. Then after that, I saw something here. I saw a break of structure to the upside. Remember that it was the sell side liquidity that was being raided. This is the sell side. Then this is the buy side. Sell side was raided. This is the buy side. Then let's mark it. You see that the market has already heads to that direction, but I just want to show you how it happens. So then we had a break of structure. Let me use 5 minutes so we can see everything at once. So we had a break of structure. The market retraced for a buying opportunity. So the first opportunity happened here. Then again we had this break of structure. The market rates this liquidity, this sell side, with a long week. So now this is it. A break of structure. You can see it's a break of structure, but there's a liquidity resting below. Market came to wipe the sell side liquidity. Then we enter for a buy. We enter in for a buy, and the buy. Remember, our narrative is that on the 15
Sorry,
minutes
please, could you
time frame.
please repeat that again?
Okay.
I didn't catch that. Sorry.
Okay, no problem. So this is it. This is what I'm trying to explain. Now let's assume that we use a 30 minutes time frame as a bias. Now sell side was raided. This is the buy side. So we are trying to form a bias. We are trying to form a narratives that equates to these are bias. Then let's go to 15 minutes time frame to see it. Now this is our 15 minutes time frame. We had this break of market structure. Remember, after liquidity, the next thing is structure. After liquidity, either buy side or sell side, the next thing must be structure. So we had a structure break. The market retraced for you. First buying opportunity. Then after that, we had another structure break. You can see it. It broke the structure. So let's go to 5 minutes to see everything clearly. So on our 5 minutes time frame, this is a break of structure. Then there was a liquidity resting below here, which is a sell side liquidity. And now let me show you the pattern, how the pattern looks like. I know I showed you the other time that looks like a pullback, but let me try to explain it back to you so you can have accurate understanding of what I'm explaining. So this is it. So we had this break of structure. We had this break of structure. Then when we had this break of structure, when we had this break of structure, then we had a pullback. A pullback. The market came back to come and wipe the liquidity. Yeah, so it was taking out the sell, and the sell side was raided. Then it moves to the upside direction for our buy. Remember, this is an expansion, if you remember, and this is a retracement, so it has mitigated this point. Then the market formed it, and since then we've been going up. So now, having this at the back of your mind, let's go back to that chart, that live chart. So this is it. Here's a break of structure. Now here is that sell side, and the market came to wipe it out. The sell side was raided. See it? It was raided. So after the sell side was raided, the market start picking up to the upside like that. So imagine you just buy from here and you held it. You held it from here. You bought from here and you hold it till when the market will get to the buy side for your take profits. It makes more sense. It makes more sense. Yes, it makes more sense. Imagine from here, you hold it to this point, it's actually a huge profit. But don't worry, as time goes on, you get it. So just leave that one. Don't think about the profits. Leave the profit alone. So we had another thing here. We had another break of structure. Let me show you. You can see it. Break of structure. And market did something. The market read this liquidity. Market reads this liquidity. So then you can see the buying opportunity started again. So let's assume that you missed this. You missed this one. You missed the second one. Here is the third one. Can you hear me?
Yes, I can hear
Hello?
you now. I could not hear you before. I could not hear
No
you before,
problem.
but I can hear you now.
It's a network. So the market creates a re-entry again. Then it moves to the upside in order to gravitate towards the buy side. Now remember, it's not a rocket science. Very, very simple. Now, sell side was taken out. You can see it. Sell side was down. It was taken out. Then we went straight away. This is a 1 hour time frame. We use the 1 hour time frame. On our frame, the sell side will be our target. When the sell side is taken, it's a preparation for a buy. Then we wait for a break of market structure on a 30 minutes time frame. You can use 30 minutes, you can use 15 minutes. If you're checking 1 hour, just go to 15 minutes time frame. Jump a time frame. Just jump 30 minutes. And you can choose not to jump. Nothing is wrong about it. So we had a break of structure, liquidity rated expansion, another entry, like that, till when the buy side was being wiped off. Okay, yes, I've passed the information. So, do you get it?
I'm trying to wrap my head around it.
Okay.
I don't completely